Well, the entire equity market, so many corporates as well as so many of the industry players have been extremely gung-ho, especially when it comes to the solar energy and the renewable energy opportunity in India is concerned. And this has led to quite a few companies announcing new capex plans, existing companies increasing their power portfolio in the renewable space, as well as significant amount of announcements and capacity additions seen even by newer players, especially post the AGM of Reliance, where you saw very strong talks and capex plans being laid out as far as the renewable energy opportunity of the country is concerned. In the context of that, Macquarie has studied the renewable energy capacity as well as the prospects of growth in India, and one of the players, Tata Power, is where they focused their attention on. They are not as optimistic at this point of time. In fact, Macquarie has downgraded their rating on Tata Power. They have put the rating down to an underperform stance, and they've kept the target price at 101 rupees a share. They are saying that they explored the blue sky scenario for renewables business and find the risk-reward balance quite unfavorable at the current market price of the company. They are estimating the blue sky valuation at 149 rupees a share, which is only possible if India adds over 200 gigawatts of solar capacity over FY22 to FY25, which is almost 5 times the current levels. They also say that as the renewables business, as well as the developer business and the EPC business of Tata Power is concerned, it contributes 37% of their sum of the parts valuation model. So the SoTP value accounts for 37%, and which is why they believe a strong portfolio operation of Tata Power in this space is extremely essential for the company to go ahead and actually be significantly determined by the strong growth and operations of the renewables business. Also, what they're saying is that based on the composition of India's installed capacity, a plant load factor weighted round the year useful capacity stands at 225 gigawatts according to Macquarie, lower than the headline 382 gigawatt number as of March 2021. The capacity required to service the daily peak power could reach almost 280 gigawatt versus just 190 gigawatt currently by FY25 in the blue peak sky scenario, the blue sky scenario that the company or Macquarie is currently looking at. They are saying that the developer plus EPC upside could give up to 42 rupees a share. However, as they're talking about the prevalent solar tariffs of close to rupees 2 per kilowatt, at this point of time they continue to remain quite wary and will wait for any further operational updates and further action on ground to go ahead and revise their target price.